For Morningstar, I'm Jeremy Glazer. Are we going to have another surprise in the August jobs report? I'm here with Bob Johnson, our Director of Economic Analysis, for his take. Bob, thanks for joining me.
Great to be here today.
So before we get into your forecast for the August report that comes out on Friday, let's talk a little bit about why this report has just been so problematic over the last couple of years. Why does this always seem to be such an outlier?
Yep. August is a really, really tough month. And one of the things that happens every August is they re-benchmark a lot of the employment data. And remember, most of the data is gathered from surveys from going out and asking businesses about what they're doing on a certain date. Well, what they actually go back and do every few months is they go back and actually look at payroll data and what was submitted in payroll taxes. If you pay the taxes, the chances are the person was really there. And so that's the data, it's the ultimate source, and the rest of the survey data is just kind of to get a broad feel for it. And so what we'll do in the August report, we'll get the data through March that's been from payroll reports and payroll tax reports. And so they'll get those numbers, and every 3 months we get this, and they kind of go back and adjust the numbers. But now not only do they adjust the numbers for that actual data, but then they re-benchmark all of the data back into the past. And so that creates all this confusion that we get in August with the data.
So there's often a lot of large revisions, too.
Yeah. I mean, it's some of them are in recent months, some of them are in past data. I mean, I'm still kind of looking for some of the really strong data in the fall of 2015 to maybe get revised away in one of these data sets. But they do go back and readjust for some time.
So let's look at your expectations for the report. We've been an average of a little bit over 200,000 jobs a month. Do you think we're going to see that, or could it come in below?
Well, my expectation is that we're going to come in below. I'm thinking about 150,000 jobs added or so, in a range of 130 to 180 as being the most likely case. But again, with the revisions, you've got to be careful on how I go back and look at the data. But 150 sounds like the number to me. The consensus is more like around 180,000 right now. You mentioned the average is more like 200,000. I think that the relatively weaker number I'm expecting is kind of a lack of a catalyst, if you will. It's hard to say what's seeing accelerating growth right now, and that's really made it very hard. I mean, you look at kind of construction, manufacturing, they've all kind of bottomed out after a few rough months, but none of them has really turned radically around. And because they didn't really fire people a lot on the way down, there aren't going to be a lot of hiring on the way up. So I don't think goods will be much of a contributor. The good news, maybe we'll end up with 10 or 15,000 added in goods because the mining isn't as much of a problem as it had been in previous months. So that leaves most of the growth on the services side, and that leaves kind of healthcare and professional and business services may account for as much as 2/3. Those two single categories, 2/3 of the job growth that we're going to get in August will likely come from those. Retail's under pressure from people like Amazon, and we've seen kind of slow numbers there. Maybe we get some back-to-school hiring that makes the number look better than I'm expecting, but really not much growth in retail. Financial services kind of remains under the gun. Even the food service category, which was a few years ago one of the biggest contributors to growth, may even not see as much growth as we're used to because we've had these minimum wage increases that may limit some of the jobs. And then in addition, we've seen issues in the food service revenues not looking so great as people spend more money at home from things purchased at the grocery store instead of going out to eat. So that might weigh on it. The only question is, does maybe hotels and some of the travel-related things kind of offset a little of that? But there just doesn't look like there's this big, giant catalyst to drive the numbers higher.
If minimum wages are rising and we're seeing jobs added in, higher paying categories like healthcare and professional business services, would you expect the wage number to look pretty good then?
I would. I mean, I think we would see a pretty good number there. And again, that's almost as important as the employment number, because if we see a big year-over-year growth in that wage number, that will certainly scare the Fed as much as, say, a 300,000 jobs added. If we saw a 3% year-over-year growth rate in the wage rate, that would certainly drive them crazy as well. So we'll be watching that number, too.
That leads us to the big question. This is the last report before the Fed September meeting. Certainly a real possibility that rates could be increased there. What would they have to see in this report that would kind of make it a done deal, and what would completely take it off the table?
Well, in my opinion, the kind of range I'm using, the consensus and so forth, those are all kind of safe numbers, something in the 130 to 150,000 jobs. I mean, that's kind of the general expectation. But if we see anything under 100,000 or anything over 300,000, I think the Fed will be forced to act. And certainly if we see a low number, they'll just say, well, we can't take a chance. And if it's a high number, certainly they'll have to put it in the context. But if it's a high number, I think they'll proceed.
But if around that 150 range and take into account what was said at Jackson Hole and kind of the commentary around this, what would be your gut if they would actually move or not on a number like that?
My gut is that they would move on a number like 180. I think that they're very worried about inflation right now, and they've certainly sent out enough governors on both sides of the actual meeting itself saying, you know what, don't assume there isn't going to be anything this year, and then one even went so far as don't even take September off the table. So I think that certainly everything's on the table. If it's in that 150, 180,000, something else is going to make up their mind. I mean, if something blows up internationally, which stopped them once before from a rate hike, that's more likely, or one of the, auto sales looked really horrible, or some other factor will likely drive the number if we're kind of in that 100 to 300,000 level. But again, if we're under 100 or over 300, I think their course is pretty clear.
Bob, thanks for the preview today.
Thank you.
For Morningstar, I'm Jeremy Glazer. Thanks for watching.